What's going on, YouTube? It's Mentorship Monday. Thank you for watching. Captain America says hello too. I appreciate you guys, and if you appreciate what I'm doing, then go ahead and give a subscribe to our YouTube page if you're not subscribed already. Check out all the many other Mentorship Monday videos that are out here, and all the stuff that I shoot from the field and for BiggerPockets and all that. Check that stuff out. And if you guys have real estate questions, email them to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com, and I will answer them right here on the YouTube channel for you and everyone else to learn from. So today's question comes from my man Jacob, who is a regular commenter and contributor to the YouTube page. I appreciate you, Jacob. And Jacob's got a really good question, but he's really kind of answered it himself in a lot of ways. So we're just going to learn from Jacob's situation that he's got going on here. But honestly, he should be shooting this video, not me, because he laid it all out here on what he needs to do. So Jacob's in the middle of refinancing a property because he wants to get out from under PMI. Footnote, PMI is private mortgage insurance. If you did a low money down mortgage, like 3% down, 5% down, typically for owner-occupied stuff, and you do a refinance of that, or just when you get that, you have to have this PMI stuff. PMI is like this insurance the mortgage company has in there. That's going to cost you a lot, probably maybe $300-400 a month for a couple $100,000 mortgage, which adds up over time. And so what you want to do is you want to try and refinance out of that mortgage to it's been blowing my phone up, to get yourself out of that PMI and those additional money you have to pay, because that money doesn't go towards interest, it doesn't go towards principal paying down or anything like that. It just accrues in fees and everything like that. So you want to refi over time to get out from under PMI, out from under the footnote. So what Jacob's looking to do is, the first thing he asked is, how does he prepare for the refi? Well, he's on the right track. He's saying, well, what if I have them do the income approach? Now, what that means is they're going to do the market approach on Jacob's property, but they're going to go and compare his duplex to a bunch of other duplexes that are on the market that have sold recently in the area that he's in. But if Jacob's a good landlord, like I bet you he is, he has his rents at market, he's got his expenses low, and all that. So the property shows really well on paper with regards to his expenses to income, and it's making good money. So the appraiser is going to calculate the net operating income of the property and use that NOI to calculate what the property is worth based on a market cap rate. So that is additional work above and beyond what the guy would normally do if he were doing just a straight market appraisal, which he'll do also. So what Jacob's offering to do is, what if I paid the guy an extra couple $100 to do an income approach as well? Now, you got to get your bank's approval that they're going to be willing to accept that, and you got to talk to the appraiser to make sure he's willing to do it. But a couple $100, $300 is what you have in here. Great idea. The next thing that Jacob has right here in the email that I would have suggested as well is to make a list of the improvements that he did to the property. Now, let's say he bought it and he paid $100,000. Probably not with the price for a duplex in California, but for round numbers, let's say he paid $100,000 when he bought the place. And then he put a new roof on it, and he redid a kitchen, and he of course increases rents as well to monetize those improvements that he made. And he put a fence in, and he did this and he did that to the property and everything. So he made a bunch of improvements to the place while he owned it. You want to list that out. And on top of that, Jacob, you want to list out what the market value for those improvements are, meaning not what it would have done to your property, but what would anybody off the street pay for those improvements? Not what you paid, but what is the average value for a new roof? What is the average value for a new kitchen? Whatever it is. It's not what you paid, it's what the average cost on the market, the normalized cost for those things are, because maybe you got a good deal. You follow what I'm saying? So let's see, list of improvements. He's asking he can ask if his tenant's not to be home. You can ask that. You can tell your tenants you're going to have an inspection. You can't really tell them don't be at the property because they have the right to be in their units. Obviously, if they have pets, you can tell them to cage the pets and stuff like that. You could ask them to clean up too. I mean, you could even throw them a few dollars to clean up their unit, or offer them a cleaning service to come and clean up for them, to come and straighten up the apartment and declutter a bit. You got to find a way to properly broach that, but it might be worth a couple $100 to have a cleaning service come and clean the units ahead of time, ahead of the appraisal, and let the tenants know how important it is to get the right value on the appraisal that you want to have, and how you're intending to hold the property long term, and this appraisal is going to help you be more stable and help you make better investments in the property long term. on and on and on from there. Okay, just have a level with your tenants, if you will. So that's it. Jacob, you're awesome. You're already on the right track. I hope you guys learned a little bit by watching this as well, because Jacob's on the right track with what he's doing here. Again, help me at DeRosaGroup.com. Subscribe, and if you think of it, share these videos with somebody in your life that is a passionate real estate investor as you are, so we can continue to broaden our base of folks that are here learning and sharing lessons about real estate investing. You guys are awesome. Really, really a fan of you guys, and I'm hoping you guys are a fan of what we're doing. Thanks for everything, and have a great, profitable week.